second quarter period is usually a good one in Sacramento, but in 2012, not so much. Net move-outs and a slight rent cut. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Sacramento update. Let's start off with a list that's going to pretty much tell it all for Sacramento's 2Q performance. Of the nation's 50 largest markets, only 5 posted negative quarterly revenue change in Q2 2012. Here are those 5, and you can see that Sacramento, worst of the bunch, 1% drop in revenues during the quarter. Also on the list behind Sacramento are Indianapolis, Las Vegas, Virginia Beach, Norfolk, and Phoenix. Everywhere else in the country among those 50 big markets recorded revenue growth in Q2. And of course, Sacramento hasn't exactly been a hot market over the past few years, but that quarterly performance was worse than expected, in part because the metro has reportedly started adding jobs again, but also because Q2 is usually a good period for Sacramento. This chart shows you quarterly revenue change in every Q2 period since 2001, and you can see that the only other time quarterly revenue change in a Q2 period was negative was in 2009, which was of course during the heart of the recession. And revenue change, of course, is the combination of the shifts in occupancy and in effective rents, and most of the damage in Q2 2012 came on the occupancy side, and that traces to weak demand. You can see on this chart that occupancy rebounded nicely in 2010, but we've seen an awful lot of fluctuation since then. In Q2 2012, occupancy dropped 80 basis points due to net move-outs from 994 units. That was the metro's worst performance since Q4 of 2008, and all 11 Sacramento's submarkets logged net move-outs in Q2 2012. And as a result, rents fell for the second time in 3 quarters, down 0.2% quarter over quarter, and that brought annual rent growth down to just 1.5%, the metro's weakest year-over-year growth rate in 6 quarters. And of course, Sacramento has been lagging the national norms for quite some time, but as rent growth here didn't get above 3.3% over the past couple of years. So what's happening in Sacramento? Well, according to the government, Sacramento added 21,800 jobs in the past year. That adds up to growth of 2.8%, which would put Sacramento among the nation's top performing employment markets. Well, that number doesn't seem believable given that apartment demand's been weak, and also because single-family home sales haven't really ticked up much. Sales volumes have not moved much relative to where they've been in the past few years. And one thing that probably has been a factor, though, rental single-family homes. Home prices in Sacramento from peak to current are down about half of what they were prior to the recession, and that has triggered a lot of investor interest in distressed houses, and that has put more single-family homes onto the rental market, and that's likely weakening demand for apartments to some degree. Okay, enough of the bad news. Let's leave on a happier note. Sacramento's higher rent submarkets are generally performing better than the rest, and one in particular to highlight, you can see on the screen, Roseville, Rockland, 95.4% occupancy. Now that is down 60 basis points year over year, but the overall rate still easily tops the metro average, and they're getting some decent rent growth there, up 4.2% year over year. And we're seeing similar patterns in other higher priced submarkets like Central Sacramento and the Folsom, Orangevale, Fair Oaks area. Now going forward, we're not optimistic that the apartment market here is going to get much better than what we've seen in the past couple of years. The single-family market is still in horrible shape, and even if the economy is adding jobs again, the hole here remains very, very deep. So we're looking for apartment occupancy to remain around 95% or just under that, and for rent growth of less than 3% in the next year. And that wraps it up for Sacramento. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.